Yeah, so today we'll be looking at DMART, and specifically we'll be focusing on some of its salient features, and we'll be looking at a comparison between its financials versus the other global and local competitors. Okay, so as all of you know, like we know, the DMART is a kind of an hypermarket which is there in multiple states right now, and right now I found today that there were about 320 stores, and I think recently they released their numbers as well. So they've seen actually a 20% increase in revenue, total revenue. But what has happened in the past 1 year is that the numbers of the shares have actually fallen down by about 15 to 16%. So up until then, it was like always like a green index of sorts, but last year it's been performing slightly poorly, mainly because of two things. One was that the post-COVID recovery was not that good in this sector. They expected it to be a lot better. And as a consequence, in the last quarter, right? So the last quarter of last year, not the financial, but the normal quarter. So it was a festive quarter, right? So Christmas, Diwali, all that stuff was there. So usually that's when the highest amount of sales happens. And unfortunately for them, even though the overall numbers have improved, the sale numbers and revenue numbers have improved, the margins have actually decreased. So this is one of the primary reasons why their stock has like fallen a little, but they've shown a lot of resilience the last 3 or 4 months, and they've actually improved quite a bit in the last 3 or 4 months. So most of the data we'll be looking at is from the market research companies. So they did a market research comparison, say in, I think about 3 or 4 years ago. So they have some comparative numbers there. So we'll be looking at those. So I think most of you know what DMART is, but just for the sake of clarifying, we'll just talk about a few salient points. So parts of this were actually discussed by Jairam before, but I'll just go through them quickly. So, so what sets DMART apart from, say, the other competitors, like, say, let's take Reliance, right? So Reliance has a lot of new stores. They have this smart stores, and we have other companies also, like I think we have Lulu, which also has malls, but hypermarkets, but it's not as common as DMART right now. And we also have more, which is owned by Birla Group. So all these are the competitors within India. So what sets it apart? So the first point was the right product assortment. So they choose whatever you see on the shelves in DMART. It's usually stuff that goes off the shelves pretty fast. And they think from a point of view, like their target audience is like the middle class people, right? So they think what will these people buy on a regular basis, not like stuff which they buy, say, once a year. They primarily focus on stuff which they need a lot, right? And they need to refill a lot also. So that's their say key target sector of sorts. So they choose and place items which are popular and go really easily off the shelves. So that's one thing that they do very well. So the other thing is that they own most of their stores. So right now, I think they've started, instead of buying, they've started leasing land and then building it. But even then, the store they build. So they usually save a lot on rental costs. So the peers they spend about 4 or 5% versus I think DMART spends 0.1 or 0.2% only. So that's a huge difference in rental costs, and they trickle down this to the end user by like giving us discounts and stuff. Their sourcing efficiency, which is nothing but like getting stuff from the manufacturers or vendors and distributors and then selling it to us, right? So that is pretty good. So this is mainly because they get a lot of discounts because they clear payments very fast. So their payable time, right? So this is the time it takes for them to clear a bill once they buy it from the dealer or the manufacturer. So that's 9 days. So when we look at a comparison, you'll see this is like really good. So because they clear these balances like really fast, they have a negotiating power of sorts, and they can ask for a little more discounts upfront. So this also passes down to the end users. Another key feature is their centralized sourcing. So if people have noticed, so when a DMART say starts in one region, right, it usually the next few are like around those areas. So I've seen in Bangalore it started, and in Bangalore like a lot came, right, multiple DMARTs, DMART readies, all that stuff came, and then it went to Hosur. So I'm just talking from Karnataka and Tamil Nadu perspective. So because Hosur was close to Bangalore, they can source stuff from a common vendor or a warehouse. They can store all of that in the same place. And then they went to Krishnagiri, which is closer to it. And then they came to my city, which is the next closest city. So they usually have a centralized mechanism of sorts where they start at one area, they build warehouses, they select vendors, they fix supply chains, all of that stuff, and then they build around it so that they can centralize this sourcing as well. So they create clusters. So this is also something which is very important and very, I would say this is very, it's a key differentiator between DMART and the other companies that are right now competing, because I've seen stores like more, they pop up in any city which needs it. Like, but what do I mean, which needs it? Where there's a population which is viable enough to say have a healthy operating income there. So they go to a big city and set it up there. But these people, before they set up, they create a chain or a supply chain of sorts, and then they get into that store. Their inventory management also is very, very good. Their inventory turnover time is like how much time it takes to say sell something and then replace it of sorts. Okay, so that's about 34 days, which this was in 2017. So this was also one of the best in the market. And the way they actually say look at the metric, like how they judge people, not judge, or how they judge the performance of people would be by stuff like how many shelves are empty, and how much inventory has gone to waste, or how many counters are ideal. All this stuff is what they do to rate managers. So they don't simply look at the sales numbers and see if the sales numbers have improved from this month to this month and then give the manager bonuses. They look at stuff which are a little more basic, right? So these things will actually have a direct relationship with the revenue, but they don't focus on the aggregated number, but they look at the stuff which makes up that and rate their managers accordingly. So moving on, so the main they create something called a virtuous cycle. So this is the main reason that people say stick to DMART. They come over and over, right? So first they make sure that they have all the operations side figured out. They have low rents, low employee cost, really good sourcing efficiency, all that stuff. So this will drive the prices down, and people will start coming like a lot more. They'll have a lot of footfall, and this will further help them make this stuff even better, because they have more operating revenue and more profits. They invest more in the efficiency part of it. So this is a cycle of sorts which help them pull in more people again and again, and keep hold of people they already have. So moving on to the SWOT analysis, like so as many of you know, SWOT is nothing but strength, weakness, opportunity, and threats. So this is a SWOT analysis of sorts for DMART. So what we can do right now is, if any of you can go ahead and say what the possible strengths of you think the possible strengths of DMART are, and we can have a small discussion on that, and then look at the what the research company thinks it is. Okay. Any volunteers for strength?
Low prices.
Yeah, low prices. Yeah, that's definitely one strength. Anything else?
Loyal customer base.
Loyal customer base, yeah.
Basically, everything at one place.
Every I'm sorry?
Everything at one place.
Everything at one place. Yeah, that is true. They have the right things at one place because most of the supermarkets have everything at one place, but I'm not sure if that. Yeah, it could be said because they choose the right things to put at the same place. Yeah, that is definitely true. So let me just delete this and we look at what the research company thinks. Okay, so they say they have the best operational efficiency. So that is true. And we looked at their relationship with suppliers, right? So this is something that we don't necessarily see, but is very important. So if we like visit our local, say, supermarkets, right? There's a lot of time where they don't have a lot of stuff that we want, right? This could be because of their relationship with the suppliers. If they don't have a good enough relationship, the supplier is not going to be willing to give the stuff which is more demand first to them. So that is one. And one more thing is like I told it, they identify with very good locations. So most of the DMARTs that you see, they are on the highway or on large roads, and the sizes are also like quite large. Right? They have good parking facilities and all that stuff, which is not there in other stores. So that also is one possible strength. So now coming to the weaknesses. So now this might be a little more interesting. Any guesses on the weaknesses?
Crowded all the time.
True, that is true. Yeah, because of that only, I think we see a little more of these premium shops, right? So like Lulu and all, they also get a good customer base nowadays because DMART is really crowded. That is true.
No
Basically,
flexibility in changing the locations because they own the space.
True. That is true. That is pretty true. Yeah. Because they own the space, they can't change. Yeah, that is a very good point. Anything else?
They have very limited online presence. They heavily rely on like physical stores.
That's a very good point, Balu. I think you've gone into the opportunity, but it's any opportunity is a weakness, basically a weakness, right? So I think that is right, but I think the research company thinks otherwise, but that is a correct point. But they have this DMART ready, right? They've done a decent job, but they don't have a, I don't think, probably the Hyderabad people know. You have DMART ready there, right?
Yeah, but it's very like limited. Will not have the choices.
Yeah, true. Okay, so let's look at what they say. So this is the first one is the key management and personal risk. So this is more towards their management stuff, right? Because they have less people managing this whole thing. There's a very good probability that they switch and they lose a lot of industry experience. So that's one thing. And I think to the point one of us made, they own that store, right? So it's asset heavy. They have to invest a lot to actually create something. They can't close it or sell it off that easily. So it's an asset heavy model. So that is true. And because of that, it's also hard to expand fast, right? So if they have to own the location every time, it's going to take a lot of time for them to grow also. So that also is a thing which is like symbiotic with the asset heavy model. Now looking at opportunities, I think one opportunity is what Balu said. They could do a much better job online, right? Any other opportunities? No? Okay, let's look at opportunities first. So as I told, they focus on very few states at a time, right? So they don't expand as fast enough. And I think a lot of you would have noticed that the number of Reliance stores popping up in your place will be much higher than the number of DMART stores popping up, right? So they're losing the edge in terms of creating a presence before time. So when people get used to some stores, they usually stick to it unless there's a really good reason for them to go to that other store. And because they're expanding very slowly, they could lose a lot of key areas to the competitors. And then the other point was what Balu had said, they don't do a good enough job with the DMART ready stores. They can further improve the sourcing efficiency and increase the number of private label brands. So they have a lot of their DMART home stuff and all that stuff, right? So they can probably improve that. So similar to what Amazon does with Amazon Basics and Solimo and stuff. So they're doing DMART homes and a few other things, but they can increase that as well. Finally, threats. Any threat that you think is present for DMART?
Probably hyper-local startups like Dunzo, Blinkit, Zepto.
Yeah, definitely. Online players who are focused on the fast delivery mechanism. Yeah, that is true. Anything else? Okay, let me just delete that. So pricing aggression. So because the web players don't have to buy prime real estate, right? They can give a lot more margin. So a lot of people, what the reason they go to DMART is, one, it's all in one place, they can buy it fast, but they also believe the prices are very good. But most of the times, based on what I've seen, I would say Amazon gives you a better rate about 70% of the time, and probably DMART has a better rate on 30% of the products. So pricing aggression is something which is very prevalent from the web-only players. They don't buy the right places also as much. This could probably be because they want to reduce the amount of money they spend on real estate, but at least in my city, they didn't buy exactly a prime property. So it's like 10 kilometers away from the city, and it's there's a small entrance, and the area is big, but this it's not like clearly visible from outside. It's dependent more on the word of mouth. It's not something which stands out. This could be different in different cities, but this is also something which is aching their model. And essentially that is like due to the real estate prices, right? Real estate prices have gone up quite a bit, and that has that's causing them issues. And inflation also has a negative impact on them, because even if when the manufacturers increase the prices, right, they still have to give discounts and stuff, and because it's going up so fast, they can't keep up with the discounts. This could hurt the margin to the overall revenue as well. So that also is a threat for them. Okay, so what I'll do right now is we quickly go through their recent financials. I won't spend too much time on these. We'll just look at the financial comparison between DMART and a few other companies. Okay, so first is like what has happened within their company. So up until 17, right? So you can see the revenue per square feet, which is like how much revenue they get per square feet of leased land. Store land, not warehouses. Okay, so that you can see it's clearly increasing every year. The employee costs are also clearly increasing, but you can see that as a percent of sales, it's stable or it has improved, right? So that's a good thing. So it means that they're not spending too much on employees. It's good for the customers, not good for the employees. And then we have the revenue. So the revenue also has grown a lot. You'll see that the revenue has grown at a higher rate than the revenue per square feet. That's because they have added a lot of stores recently, right? The growth also is like pretty good. You can see about 30%, something like that. And even this year, they had a 20% growth in overall revenue. The margins are always stable. So the gross margin and their EBITDA, which is the earnings before interest, tax, depreciation, and amortization, is also very good. So these are, when we look at the comparison, you'll see these are like market leading numbers. And even at a global level, these are like very, very good numbers. So now comparison with other Indian competitors, right? So this is DMART here. Reliance is there. More is there. Future Retail, I think now Reliance owns, right? And someone can let me know if I'm wrong. Spencer's, I know. I'm not sure where Hypercity is. Anyone knows where Hypercity is?
I think I have seen it in Bangalore.
Yeah,
Okay.
I've also seen it in Bangalore near Marthalli.
Is it like a mall-based thing, or is it a standalone store?
It's a superstore. It's a standalone building. It's not inside a mall.
Okay, okay. So I've not heard of this until now. Spencer's is the the name itself is Spencer's only, right? The store
Yeah.
name also.
Yeah.
Yeah. Yes.
Okay, okay, got it. So you can see that the numbers are very, very good. Like 25,000 versus the next best is like 17,000, which is more, and more is like more focused on the small sized stores, at least in I think second tier or third tier cities. I'm not sure about the larger cities. So they have very good, they have a great edge here, and you can see this distinctly distinct gap between the stores. Is Hypercity focused more on the luxury goods? Not exactly luxury, but a little more on people with higher discretionary spending.
Yes. Yeah. So in that Hypercity where I went near Marthalli, there's even a crossword store inside. So they have it is actually bigger than DMART. One store is bigger than DMART size wise, but they have everything inside. And it's it caters to a little bit better customers with more discretionary spending, like you said. Yeah.
Yeah. So, and I think that shows in this also, because here, like I think 100 people will be there in 1 square feet. They'll buy it and go. Here, probably 10 people will come, but they'll spend more, and they have a better margin.
It's actually very much focused on the for the Bangalore crowd. So the products it has is also varied in terms of luxury ones. Like DMART has for the middle class crowd. It has for the higher end.
Yeah. And so when we look at the margin, right? So you see DMART's margin is actually less. So it can mean two things, right? The margin can be less because they're doing a bad job in the operations front, right? Or it could mean that they are like giving a lot of discounts. So I think it's more associated with the discount part, and Hypercity and these companies are probably doing worse in both those areas. Operations might also be less like poor, and they probably are adding a higher sticker value also. So they probably might not be giving us good enough deals. And probably the people they're catering to also don't look for the deals exactly. So that is one thing. And now the interesting part, which is the amount of money they spend, right? Lease. So you can see stuff like Hypercity, they're spending 5% of their sales on rentals versus 0.2% in DMART. So that's a huge difference, right? So yeah, they probably DMART spends a lot upfront initially, but they probably split that across years, and then they make a healthy return on the land value also. So all that stuff is there. So the percent of sales is like 0.2%, which is very, very good. And this number, it might seem less, but it's a very large number because it's percent of sales, right? So this 5.5%, if you see, I think that is the main difference between the gross margin, right? So if these people spent like 1% instead of 5.5% on rentals, they could probably give you a 4% or 5% better deal. So that's what we are losing out on as end users. And the other interesting thing I told about the payable days. So all these people, and I think this one in particular, they are taking a lot of time to clear their dues. So this doesn't directly affect us, but as I told, it indirectly affects us because they don't have good terms with the suppliers. And obviously, suppliers are going to supply to the people who they know are going to clear the money first. And money, like this might not seem like a large thing for us because, so what's the difference getting the money 10 days after I've given you the stuff versus 30 days after? The thing is, most of these suppliers, they rotate the money. It's not like they own the money. It's not like all that money is profits for them. They have to use that to buy the next cache of supplies, right? So it's very important they always have this liquidity. And when this time increases, it means that their liquidity decreases, and that in turn is very, very bad for both the suppliers and finally the end users as well. And future retail, I'm not sure if this is what they always do, or if this is because of their issues, right? If wasn't future retail only owns Big Bazaar, right? Or was it different? Does anyone know?
Yeah, I think it's the future group only. Yeah.
Okay, so probably this could be during that time they were facing all those issues, or I'm not sure when they started having those issues, but this is for 2016 or 17. So it could either mean that this is what is causing the issues, or probably the issues manifested. So it could mean both those things. Then moving on. So this is like profit after tax, amount of trading area they have. All this has been growing, and it's been, if you see, actually the profit after taxes has like outpaced the amount of trading area. So here it was like less initially, but now once they've figured out the supply chains and they have their efficiencies up, you can see it's like outpacing the trading area. That's also very good. And this is the profitability. So if you see, most of the retailers are not profitable, like the Hypercity, the Spencer's, all these are like not profitable yet. So some of the profitable ones, like Titan, I'm not sure if they have a separate brand for supermarkets. Shoppers Stop, I know. Trent, I've heard of. Trent, I think, is a holding company. I'm not sure. But these are some of the profitable ones, but even they are inconsistent. So see, 1 year they have a good year, 1 year they have a decent year, and 1 year they have a bad year. So there's no consistency here, but versus DMART, which has been consistently pulling in profits, right? So you can see that here, it's consistently pulling in profits. Great. So the final set of metrics I had was comparing it with the global competitors. So Walmart, Costco, and Target. I think Walmart is similar to DMART in a much larger scale and much larger array of, say, products. Target, I think, is a little more premium, if I'm not wrong, a little more premium when compared to Walmart. So when you look at the numbers, right? So let's leave the market cap and stuff, because that is obviously much higher for the global players right now versus DMART. But even there, DMART's growing pretty fast, so it could be competing with the smaller ones pretty soon. But the stuff that I wanted you to see was, say, the EBITDA, right? So DMART's doing much better than even the global players, and the profit annual growth. So this is like compounded annual growth, if I'm not wrong. So that is like 53% for DMART, versus it has shrunk for 2 of the global players and increased by just 10% for the other one. And sales also, every year it goes by 33% for the last. This is like up until 18, so they had a huge growth spurt, right? So that time it was like really good. Now I think it's closer to 20% right now. But even that is like outpacing all the global players. Return on investments, not investments, return on equity, I think it is on par with the global players, or slightly better. So almost in all of these areas, right, DMART is doing a good job. I wouldn't say by market cap, but as a per capita thing, if you look at how your stock is doing, then DMART is doing a pretty good job there. Finally, the numbers versus like Walmart, right? So you can see the margin for Walmart is higher, and margin for DMART was actually pretty low even when compared to the Indian competitors, right? That this might increase in the future once they have a solid enough customer base, and they feel that they will be okay with increasing their margins a little bit, like the customers will be okay with it. But right now Walmart has a higher margin. But what is important is that margin is consistent. So if the margin is not consistent, it means that the company is like changing a lot of things on the operation sides of it, or giving too much discounts or haphazard discounts and all that stuff. So it's very consistent for both Walmart and DMART. So this shows stability. The same goes with the EBITDA, right? The margins for EBITDA margins are actually DMART has actually gone higher than Walmart in the final years of this set of this data set, right? So it's done slightly better, but it's comparable in most cases. The same thing goes with the profit after taxes as well. So they are, yeah.
And you went through what EBITDA is?
Yeah, I just told them what EBITDA is. Like I told them it's earnings before interest, tax, depreciation, and amortization.
Okay.
I didn't explain it in detail. Like I just told it is that because we were like.
Okay. Yeah, that's fine. Yeah, I think once people can. Yeah, please continue. You are at PAT. Yes.
Yeah. So the PAT also, like when compared to Walmart, it was initially less, same as EBITDA, but now it's slightly higher than what Walmart is getting there as well. This return on investment also during the initial periods, it was like not investment, return on equity was also like I think half of what it was for Walmart, but now it is like slightly higher. I think it's 20 or some % higher than what Walmart has. So yeah, I think I'm done with all of this. Any other comments or questions on this?
I just noticed actually how low their PAT is. PAT is profit after tax, which means this is the tax after all the expenses. Okay. So if you take, either 2.7 or 3.7, I think let me just refer to this. So that is the 2.7. This is 3.7 I'm talking about. Basically 3.7 means that if you had spent 100 rupees, which means that 96.3 rupees is all cost, and they only retained 4 rupees, less than 4 rupees they had retained. Okay, so that's what it means.
Is it excluding operational costs and all as well, or just the tax?
All costs have been paid for.
Okay.
Everything has been, so net, if you spend 100 rupees, they only got 3.7 rupees margin. That's the profit.
Yeah. So 4% they spent, essentially 4% they spent on taxes, depreciation, and interest. So
yeah. So taxes, interest, right? Taxes and depreciation. So just this is significant because I think if my understanding is correct, so Sanjay and others, you can correct me. DMART typically buys the place, or does it buys it
buys it.
It buys it. So it means that on one hand, capital expenditure is way higher because you have to put in the money to buy the land. Land often is a constraint, because it is way more expensive. Globally speaking, land in India is very costly, and the other thing is and they have to build it up, right? So real estate costs are also reasonably high, right? I think they may not put in much in DMART. There is nothing to put, lots of stock is what you have, except for the aisles and all, there's not much, but still that costs, right? And they also put in the AC and all, right? So that cost, especially in summer, right? So those costs will be there, yeah. So this is lease rental as a percentage of sales. Huh? So for Hypercity and Spencer's, More and all of that, it is high, but for DMART it is way less because they don't have to spend any more. Once they build it up, that's it. They don't have to build, they don't have to pay. There's no annual cost, and it doesn't go up also, right? So with that, making 3.7 is a big problem, right? So it shows up as a depreciation cost, and this depreciation cost will come down over a period of time, and it will be like that forever, right? It's a long-term play that they are playing. It's not a short-term play they are playing. So back to you, Sanjay. For any
Yeah,
other
I think I'm done here, Chetna. So I wanted to see if anyone has any other thoughts on DMART or.
So I just have like a small question. One thing that I've noticed while I was in Bangalore, so whenever I order, say, I'll take a quick example. So when I'm say suppose I'm ordering Lay's from Zepto or something, so they have a sort of a different kind of flavor. It shows in the packet as well. It's a South Indian flavor. So it's different from the Lay's I have had in say Bilaspur or something. And Zepto essentially only has that flavor only, that South Indian flavor itself. So I wanted to just ask, that is sort of a weakness for Zepto. It's I'm only talking about like one product, but if I extend it to some other things, it could be one of the weaknesses. So I was just asking, does DMART have the products they have? Is it standardized, like in general, what products are in all of the country, or since they are buying that particular place, so it's also.
Yeah, so that lace thing, right? I think I've also seen it. I think I've seen it recently. I'm not sure if it's a
Mostly, I
strategy
think
from
it's the
Lays
new
itself.
flavor they have
Yeah.
introduced. Blue Lace was different that you're talking about, Anushka, that mostly sells in our city. But I think that's a new flavor they have introduced, the South Indian one.
Yeah, but I think they're replacing it. Replacing the magic masala in some of the South Indian stores. I've seen that in more as well.
Actually,
so more used to have the normal one. Now it has the South Indian masala. I'm not sure how different it is in taste.
let me just rephrase that. I was asking, the stock the DMART has, is it localized or is it
Both.
Okay.
Both. I've seen like I just visited a DMART in Vellore. Like they just opened it. That's one reason why I remembered I had this. So I went last week. So it's relatively new, like 2 weeks ago, something like that. But what I noticed was that some of the stuff, right? The oils I've seen, right? I've seen that most of the oils there, they have the large brands, the Indian brands and stuff, but they also have brands from Tamil Nadu itself, oil brands. So stuff which even Jaggery, and you see those loose things that they sell, right? The pulses and stuff, all that. So they source that in bulk from the local players, and they then put it there. But stuff which is more, say, from an FMCG point of view, I think they have they use their networks, these national networks there. So they look at what in the end gives them a better margin, I think, and then they choose their the stock that they're going to display there.
What people consume, right? See, they have to have stuff that people buy, right? If I buy a certain brand of oil, for example, which may not be available, let us say, in Odisha or probably in Kolkata or something, right? I'm not trying to see. I think when people go to DMART, they're trying to save more money, right, and get their monthly expenses. I think that's primarily what monthly groceries and all of those items, and save the money. That's what I think most people are trying to do. So I would obviously want to buy what I buy typically, but at a lower price, right? And I'm not necessarily trying to access what is available in Kolkata in my place through DMART. I don't think they're trying to do that. Right? So DMART would also like to make available whatever they buy. They would like to make that available in their store at a lower price. Right? So it has to be a mix, because most of the stuff that they buy will be local to start with.